disabled. So we want to take a longer look at each one of these items as we go along, and we will do that starting with our property coverage. We talked about property and how do we evaluate when we're asking, someone says to us, well, how much property coverage do you really need and what do you want? Well, let's think about it, and our contents would include furniture and equipment, your betterments and improvements, everything that you've put into the building as you're building it out or working to improve it. Of course, your furniture would include all of your equipment, your tables, your chairs, anything like that. Your stock and product, your glass, because if beautiful pieces of glass get broken, you want to be covered for that. Any signs that you have, whether they're inside or outside the building, your money security, and then your computers. Oftentimes we forget computers. We forget those machines that we're using for our credit cards. And then, of course, the building if you own it. And sometimes the building, even if you don't own it, if that's the way your lease is structured. So these would be the things that we're talking about when we talk about property valuation. So when you're speaking with your professional and they say, well, what's the value of your business? What's the value of your contents and so on? This would be the list of items that you would want to think about when coming up with that value. And then they're going to be insured for either the actual cash value, which is not used so much anymore, versus replacement cost. And replacement cost would give you new for old. So if you had an old machine and you had to replace it today, the valuation would be at today's value, which is really the ideal way to do it if you can. Deductible is almost like the deductible on any other kind of insurance that you have. What's going to be the amount that you're willing to pay in the event of a property loss before the insurance company starts paying? And then business loss of income, which is huge and often overlooked, but something that we need to think about in the event that you have some kind of a claim for a fire or lightning, something like that, and you can't use your facility. What do you do then? Well, business loss of income will help you with that. The trigger to have the coverage start would be a covered loss. So if you had a fire and you couldn't use your facility, you would trigger the business loss of income factor. The basis can be actual loss, can be dollar, can be time. So it really, again, will depend on the type of policy that you're buying. And the waiting period is the deductible on this portion. Sometimes it's 24 hours, sometimes 72 hours more commonly. And then once that kicks in, then your claim will start. So that's the property section of your policy. And we're going to move along right here. And
do you mind if I jump in?
No, not at all. Go ahead.
A real quick question. Okay,
sure.